Welcome, everybody, to Beat Around the Blockchain. On the show, we strive to bring you the best and brightest builders, innovators, entrepreneurs, and businesses in Web3. Today, we have a really special guest, Casey Kuhlman from Monax Labs. You might also know him from the Aspen NFT platform that they're building and releasing a lot of great features this week. So, Casey has an interesting background. He was a structural engineer in his earlier days and decided after some time there that instead of building things up, he wanted to blow them up instead and decided to join the Marine Corps. From there, he did a stint on the legal side, went to law school, spent a little bit of time in Africa doing law, and that was actually where he had his first experience with NFTs prior to when they were called NFTs. This is 2013, 2014 timeframe. And from there, he kind of fell down the rabbit hole when it came to blockchain, technology, contracts, and really where legal and blockchain start to mesh. So we go through a couple of great things in here. You'll get some context into his background. We spent a lot of time talking about macro trends that we've experienced over the last few years and really some of the differences in these bull and bear cycles that we're experiencing compared to previous ones that he's experienced now that we have the macro economy being a very big factor in that. So a lot of great conversations. Stay till the end. He's got some great announcements for some stuff that they're working on at Aspen that are really exciting. And I hope you all get some great value out of this. It was a great conversation overall. Casey's a great guy. Highly recommend following him and everything that they're doing at Aspen. They're really focused on building things at the infrastructure level that I think are going to really help move this space forward. If you like what you hear, feel free to give us a follow. If you're listening, subscribe. If you're on YouTube, please subscribe and turn on notifications. We're trying to ramp this up to posting once a week. And so I know I've been a little bit scattered since for the past few weeks. Things have been a little hectic, but appreciate all of you guys following along. And if you have any recommendations for people that you want to hear from, feel free to tag them in the comments, shoot me a message on Twitter. You can follow me at GabrielC_NFT on every single platform. So I appreciate all of you guys listening and hope you enjoy. Casey Kuhlman, how are you?
I'm well.
Good. I've been really excited to meet with you. I had the privilege of speaking with a couple of people on the inside of Monax Labs, and you guys are working on some pretty cool stuff. So very excited to dive into that a little bit later. But I figure a good place to start is really give a little bit of background on you and kind of how you got into NFTs in the first place. It sounds like it's been kind of a windy road of a lot of different types of things that ended up leading you here. So I think a little bit of background on that would be great.
Yeah, so I am a crypto class of 2014, and our company has been building at the intersection of legal tech and blockchain tech since 2014. And so it's really exciting how NFTs now are have entered the sort of crypto zeitgeist. So we've been deep in the crypto zeitgeist, building various things over the years. And one of the things that we were always really focused on is how do we do the next level things to bring interesting use cases to the masses, and so what I really think is great, and what really attracts me to the NFT side of the crypto ecosystem is the fact that we now have openings to do a bunch of use cases that people have been theorizing since 2014, 2015, that are not just simple like fungible tokens, here's some money and trade it use cases. Those are all well and good, but those have never really been particularly interesting to me. I've always been interested in what can we do from a property ownership, art, and culture perspective. To me, those were always more interesting. So it was very exciting to see the uptick in people's interests around NFTs vis-a-vis sort of just the other side of crypto and some rebalancing there because crypto, NFTs have been around since the earliest days of Ethereum at least, and so this isn't anything particularly new, but it was always sort of niche and over in a corner where a bunch of people were working to kind of prove out the use cases. And what we saw in 2021 was really a proving out of the of digital art and collectibles use cases around NFTs, which now launches us into a new era of rebalancing away from or bringing more people in that are interested in more things than just kind of cryptocurrency trading.
Yeah, absolutely. So this was really interesting. And a reason I love the timing of this conversation is because you're very focused on the legal side where legal and blockchain kind of mesh. And there's a lot of conversations that are happening right now when it comes to anything legal, regulations, royalties. And again, we'll dive into that in a minute. But what was it initially that made you decide, oh, this is the thing that's interesting to me? Because to your point, there's a lot of different use cases. There's a lot of things that need built from an infrastructure standpoint. And we're all kind of working on different areas. So what was it about legal that really clicked for you?
If we want to move NFT use cases forward, they're currently not situated to expand probably much beyond where we have expanded. And from a use case standpoint, from a market standpoint, we probably reached the peak of what we can do unless we unless we add some real core capabilities to the suite to the kind of core suite of things. So the current inability for, just as one example, the current inability for folks to insert like properly and mechanically, and we can get into this in a minute or later, what I mean when I say this, but to properly and mechanically put a license, terms of use, terms of service agreement around an NFT has really limited the folks that are going to participate in this technology. Whereas if you have that mechanical ability, and then you open up the spectrum quite dramatically. And there are a range. That's just one example, but there are a range of different use cases that people really want to do. That if you take current NFT technology today and you add a few kind of legal tech hooks, those use cases start to become much more doable than if you try to like back your way into the use cases using only the technology of today and say, well, that's sacrosanct. We can't improve beyond the generation zero of NFT standards in the Ethereum ecosystem. I mean, I think that's like that belittles all innovation, and while it's interesting to have standards and standards are helpful, standards can also be a hindrance because people can say, well, if we don't because it can be very hard to improve standards, and so that can be a drawback in certain instances. But one of the things that we believe is that adding legal tech hooks into the existing NFT interfaces via supplemental standards is going to dramatically and exponentially expand the use cases that are possible if you can do that at an infrastructure level. And so that's why we are interested in focusing on this area.
No, I love that. And let's talk a little bit about like NFTs as of today. And by today, we'll speak to the last 18 to 24 months when we saw a pretty dramatic ramp up in people coming into the space, trying to understand what the heck this technology is. I was one of those people. I started learning about it in February of 21. And like a lot of people in the space, Gary Vee was a big person that kind of taught me about the tech. And I think you had a similar experience when you first saw the first contract way before they were called NFTs, what we refer to now as smart contracts. And for me, it helped me really understand, okay, like I've been in crypto on a very like small basis since 2017, but I'm not a big finance guy. I don't really follow money too much. I don't care about it that much. But I understand human emotion. I understand. I'm in sales, so like I understand how people buy, and what causes people to really get that feeling that allows them to, oh, hey, like this is something that we want to partake in. And NFTs, when I understood the smart contract and how this can really impact endless amounts of industries and all of these different use cases, and just brainstorming them was a ton of fun. And obviously there's a lot of limitations because of the tech, which we're going to get into on the legal side. But we found some more fun and surface level use cases that really took the world by storm, took social media by storm, and we saw a lot of traction there. So, what were some of the observations you made as things started to pick up in early to mid 2021 that were exciting and positive? And then a second question I'll have you follow up with is, what were some of the things that you started to see? Oh, no, this is not good behavior. This is not going to help move the space forward. This is what's going to get us stuck in a rut.
What was really exciting in the run up in 2021 is that we were expanding beyond crypto finance bros in the ecosystem to and I think we saw a big diversification in what constitutes crypto, if you will. And for those on audio, I'm putting that in air quotes. Um, the what constitutes crypto diversified tremendously over 2021, and for me, that was one of the most interesting and important things. Is that crypto used to be a bunch of like trader finance, largely bros that were talking about this coin or that coin, or maybe the new DeFi protocol that was going to, um, you know, save the world by becoming the next Ponzi scheme, and that's all well and good, and not all of them are Ponzi's, and I don't mean that necessarily to belittle everybody, but there is like a pretty unilateral set of people that were in crypto at that time that if you mark it, let's say the end of 2020, and compare where crypto generally was at the end of 2021, I think we saw an entirely different ecosystem in terms of the people that were in it. Obviously, the initial group didn't go anywhere, but it expanded dramatically. The number of voices that came into and the number of voices that came into the ecosystem during the 2021 run up was, I think, the most important thing that happened in 2021. Sure, it's great and well and good that people made money, and lots of people put food on their tables, and that's all well and good, and I'm super happy for all of those folks. But I think what is lasting and what is important in the long term is that as a crypto ecosystem, we moved substantially closer to becoming much more mainstream by significantly diversifying the voices that were in our ecosystem away from just a pretty narrow crypto bro slash libertarian slash cryptographic engineer and distributed systems engineer, which is basically all it was before, and that was a pretty small niche. And so this brought a lot of new people in, and that are now doing DeFi, that are trading coins, that are doing all those things, of course, but they came in from that run up. So that's one thing. The thing that I was worried about in the run up, and it's kind of proved out this over the course of this year, um, is that when you're new to something, and you come into something, you observe those things around you, then you think that is the way that things need to always be. And so, um, I don't have any opinions necessarily on OpenSea, but I'm going to pick on them just here in a little bit, just to provide context for what I mean, which is that people think that the realm of the possible is what OpenSea and or Magic Eden or whatever have shipped today, and they don't necessarily know that that's probably not the realm of possible, because a lot of what they shipped is like less than 6 months old, or maybe a year old or whatever. It's like it's all relatively new. It's not that doesn't have to be the way that things are just because these people act in this way. So what I was really increasingly worried about is like limiting our imagination based upon what has shipped, and we saw this in 2017 as well. In the run up around the ICO era, we saw similar things happen, particularly with developer tools that folks would use to stand up new blockchains or protocols. It was a similar mentality that that things would not be possible because of tool or tech limitations, until people built different tool and tech that said, no, that's not, we're not necessarily limited there. So that's what I was worried about, and it's really kind of played out this year in a way that I was worried it would.
Yeah, I completely agree. I liked your point on people coming into the space that are new. What they see is and observe in those moments is what they assume to always be the case, right? And it played out on the side of like being everybody making money, right? Like I come into the space, I hear about, oh, let's say I got in September of 21. That's like a pinnacle place where apes start having a run up. Everybody knows what a punk is. V Friends is doing all these really great things. And it's like, oh, this is just like, I'm here at the perfect time. Let me start buying these penguins or lions or whatever derivative of a punk, and I'm just going to make money every time. And then that's the prime time for all the negative behavior of these scams and what we refer to as rug pulls coming in and stealing money and giving everybody these negative connotations around it. And then it just more reinforces anything around crypto and NFTs as scams and Ponzi's and so on and so forth. And so,
Money
yeah,
grabs.
exactly, money grabs. And the biggest frustration and the reason we continue to talk about we need to stop, like we're not going to have adoption until people don't realize they're buying an NFT, and we're not calling them NFTs anymore or talking about crypto in the same sense, because we've already ruined those words, right? And nobody's going to participate, especially like the average and late adopters, until those are no longer a thing. They don't even realize they're getting it. We're just buying digital assets because those aren't scary. People buy them all the time, especially these younger kids that are playing these video games and buying skins and all of these different things that they don't even own. So that game shuts down or goes out of business. All of that stuff's gone. And when we start creating the infrastructure to allow them to take these in other places, and they actually own these things, which I know you have some thoughts around ownership and possession that we'll dive into as well. It's going to open up a whole new world. And so we're at this phase now where we've gone through this super high, and we've tumbled down into a very, very different place. You go on crypto Twitter, and it is very different sentiment, very different conversations. People are fighting to still get the same level of engagement with the least value adding tweets, and it's kind of a ghost town in a sense. There's still some communities that are active and lively and positive, and you can do what you can to participate in those. But overall, the sentiment is very negative, and that's been the last 6 to 12 months. So this is the first bear market I've personally been a part of and aware of. I'm 25 years old, turning 26 in a few weeks, and so this is the first time I'm really seeing all of this play out. And so, as somebody who's experienced, we'll say the crypto winters, which don't always cycle the same. They cycle a lot more frequently than like the economic cycles do. So what is different about this crypto winter, in a sense, from previous ones, whether it's because of the fact that NFTs had such a big run up specifically out, and so it kind of went hand in hand with crypto, or because we're also now coupling this with real life economic like detriment in the system as well.
This weekend, the Bank of England said that in the UK is officially in a recession, and it's going to be worse than the Great Recession of 2008.
Mm.
So, I mean, the U.S. hasn't said that, but let's just set that aside. Like, large scale, sorry, large macroeconomists are signaling this, and whatever the politicians say, the words are going to be the words are going to be. But at the end of the day, like the economic reality is that we haven't really faced a crypto market with a significant macro downturn coinciding before. And this is so this is clearly going to bring things down. I don't think the run up that we saw in NFTs in 21 into 22, I don't think that really was significantly or proportionally different than we saw in the ICO era. I think it was less. I think it was less significant in the ICO era. You had everyone raising on Bitcoin and ETH, and then instantly liquidating to USDC very, very quickly. A lot of money that came in to NFTs last year wasn't instantly liquidated because ETH was still running, and then a bunch of people liquidated it on the downturn. But like the proportion of the industry that was NFT projects liquidating as proportional to the total amount of ETH was smaller than what we saw in the 2017 drawdown, where basically every bit of ETH was somehow tied to an ICO proportionally. It was much more significant. So I don't think that has as much to do with it. I think that we're seeing a natural correction in the cycle, which is exacerbated by the macro conditions that everybody is seeing. I mean, I have a smart meter at my house. I live in the UK. I have a smart meter at my house, and we're kind of normal people. Like, we don't live extravagantly, and I've now seen, as of 2 days ago, a 5x increase in what that smart meter is reporting every single day from what we had before. Like, I mean, there are massive macro conditions that we were not experiencing in either of the other crypto downturns. So that's one thing. But what we're seeing, honestly, is that like crypto isn't imploding, and surprisingly, ETH has really held this kind of $1,500 to $1,200 bottom surprisingly well. Bitcoin has held its bottom surprisingly well. I mean, yeah, there have been dips down, but it's really kind of held this bottom here despite some big macro moves. And I think the other thing that we have to understand here is that there is a hell of a lot more built.
Yeah,
Sorry, I
you're
don't know if I
fine.
can say hell for your audience, but in any event, there's a hell of a lot more built now than there was in 2017. Like, we have NFT use cases. We didn't have those. We have DeFi. We didn't have that. We have like many different chains doing many different things. We have scaling solutions. We have wallets. We have all these things that we didn't have in previous crypto downturns in terms of stuff being built. So in 2017 and in previous generations, we saw big downturns largely because people just took a bunch of money that they raised and they liquidated it. That started an oscillating cycle down. That was fine. That was a market correction, but we had no real way to get up from that until all the stuff was built. And so then we had to go off and wait around in the snow for a while the stuff that had been fundraised was built. Then that was built. That moved forward to DeFi Summer. That brought a lot of interest, and then we moved into directly after DeFi Summer. We go right into the the NFT run up. That brings even more like momentum in. We have a run up in everything else. Then that cools down this year. That gets exacerbated by the macro conditions. So I think what we're seeing is we're less limited in crypto by kind of what is built, which we were previously, and we're more tied into just the macro conditions, and so it's ironic because Bitcoin, as an example, is trying to solve inflationary problems or problems in this bit of the ecosystem, and It hasn't really proved
Yeah.
countercyclical yet. It's proved just another asset class, at least in terms of the way its values flowed. But it's found some stability where other asset classes are still challenged.
Yeah, I would agree. And something that I've been hearing a lot about is, I mean, to your point, during the downturns is when, okay, we had this run up that led to this downturn, but during that there was a lot of money that flowed into the space, and a lot of really great companies were viewed as people that can stay for the long term, and investors saw that. So they are now or they have plenty of funds on hand to be able to sustain the next 18, 24, 36 months and build, right? They put their head down, there's less noise, they built, and it led to a lot of what we had seen because all this infrastructure got built to be able to help bring on people for NFTs. The same thing kind of happened, where we had all this money flowing in. I mean, billions of dollars coming in, and these companies now have cash that they're sitting on. They're not really worried about funds for the moment, and they're just kind of, okay, head down and sit here and build. People had this notion that royalties were going to be the way that you can sustain cash flow, but obviously we've seen that is not a good business plan. And there's a couple of reasons why, which we'll get into. But we're at a point now where we've got a couple of key companies that we could name, that are really, they're still kind of sustaining their floor price when it comes to their NFT. They're still have an active community. They're building really cool things. They've got all of this stuff in the works, but it's still kind of quiet. And you all at Monax have been building pretty under the radar as well, despite a larger following on Twitter. So I'm curious, before we get into Monax specifically, what are some of the things that you foresee need to be built in order to get us out of this rut, in order to take us to a much more scalable level, where not only we can onboard more people because it's just easier to use, but also have more applications and more use cases because we have the infrastructure to support it?
So many things need to be built yet, and it's it's quite funny. You bring up the royalties, and it's very funny that we've seen already a race to the bottom triggered, and it's it's very crypto that this is happening because in in a non crypto sphere, you see races to the bottom once everything is matured and become commodities. So once a tech or once a like way of doing business or a project management interface or like a software category, if you will, once that becomes mature, and everybody knows what they need, then we see a race to the bottom. And what we've seen with marketplaces, starting with X2Y2 being worried about being able to make business, and then contagion from there out to now even OpenSea is with their announcement on the weekend is going to be going to zero royalties for anybody that doesn't do things their way. And so everybody now has been oscillating has been oscillating to the bottom. So we've seen a race to the bottom, but in my opinion, there's so much more value to and things that need to be built for folks that are trying to build their Web3 businesses. Like right now, if you're a Web3 business, like, okay, is it done that you have an NFT collection and you can trade it on OpenSea? That's it? That's all we're going to do here? Like, I mean, are you serious? This is building,
Yep.
we're trying to build brands here. Like, we're trying to build businesses. Like, let's get real. Like, if you're,
Yeah.
if you're Yuga or you're any project really that is a legit project that tried to do something, you weren't running a scam, you weren't purposefully rugging people, then you're trying to build a brand here. You're trying to build a business. And you used your collection launch as a way to maybe get some startup capital, and then maybe you had a generation 2 to extend that capital, and then maybe you had some runway from royalties that came out. You're building a business. This is a business, no matter which way you want to call it. It could be a DAO, it could be whatever. But fundamentally, we're doing the same thing here. We're building a business. It's a Web3 business. and we can put whatever outer dressing
Yep.
on it that we want. But you're building a business, and so for the big platforms to say today, well, we're going to race to the bottom because we think that this is mature and everything has been built is just, to me, like really weird. Like we haven't really. It's like I said, it's very crypto because it's almost arrogant in an immature way because like it's a bit arrogant, kind of. It's not really, that's not really the right word, but it's a bit awkward to say, okay, all like we're done. We can't bring any more value. We can't build for you anything more of value, and so therefore we're going to have to compete with each other in a race to the bottom. That's just, to me, I don't really understand because there's so much more to build here. There's like an insane amount of tooling that and helpful things that can be built for creators, for collectors, that will help people build their businesses, that will help bring more mainstream in, that will make this all more compelling from a storytelling perspective, from a usability perspective, from a, I want to be involved in that perspective. Just so much to be built. Sorry if that was a bit of a rant.
Yeah, I completely agree. And what? No, that's good. I mean, I agree with all of those points, and I mean the passion behind it is not left unsaid. And so let's dive into Monax specifically. Your guys' mission is to make NFTs safe, secure, and legal. So if you want to give a little bit of a pitch on what that means, what it is you're focused on specifically, and we can kind of break it down from there.
Sure. So we're building Aspen. It's an easy to use all in one NFT platform that has integrated legal. And we're really building Aspen for as a platform on which collectors can come in and manage their portfolios, and for creators to be able to manage their Web3 businesses. So, if you will, Aspen, you can think of it sort of what we're trying to do functionally is to become sort of like WordPress was, but for Web3. And so we have a range of tools that can be used from an API or can be used from our application that allow folks to build their Web3 business on the one hand, and then allow creators or collectors, I mean to say, to manage their portfolio in a slightly different way than just go to a web page and look at my NFTs. And so we've built tooling kind of across this landscape that is really focused on enabling the folks to do what they need to do from a business building perspective, and I think that's one of the things that's is quite a bit different in terms of what we're doing vis-a-vis some of the other more kind of marketplace focused companies in the stack.
This is really interesting. You use the example of the comparison of WordPress, and I've used WordPress a few times in the context of WordPress is a tool that it's double-sided interface. So you've got the back end that it gives you all the tools that you need to do from a development standpoint, which in the current environment for crypto and NFTs, I feel like that's also the front end and what it looks like and what the experience is like, which is a big barrier, right? If you're not a tech head and you're not willing to go through the mud to try and figure it out, I don't want anything to do with it. But what WordPress does is it gives you a beautiful user interface that you go and interact with, and if you built it properly, it just makes sense, right? And so is that kind of the concept of what you're trying to do? Because you said the creators and the actual users, the collectors, where it gives the creators all of the tools they need to do what they need to do for whatever their business is and whatever vertical that is, and for the collector to have a very user-friendly experience because they have the tools to build that front end for them. Is that a good synopsis?
Yes, and you picked up on exactly what we're trying to systematize. So before WordPress came along, the predominant way that you got a website was you went out and paid somebody a lot of money to quote unquote build you a website. And
Yep.
one of the big things that WordPress did was it gave anybody a set of tools on which they didn't need to pay a developer, but it did so in a manner that gave folks was modular and gave folks a lot of flexibility in terms of what they actually produced at the end of that, their production journey. And then of course it had the double sided, like you said, and we're in a market environment now where the predominant way in which people stand up NFT projects is they have an idea, they get an artist, and then they go get a developer, and they commit some percentage of the mint revenue to the artist and some percentage to the developer. And everything's custom built for the most part now, not exclusively, but largely custom build smart contracts now, and very few folks are moving towards sort of service based things because most people don't understand that they can get all the flexibility they want for their mint from a systematized solution. So the reason that a lot of people think they need to go to a custom developer is because they have, they want to do this type of mint or that type of mint. And sometimes that's right. I mean, if you want to do like heavy on-chain generation of some art, and then you probably do need a custom developer to do that. Just as in the real world, if you wanted a really, really weird website, then you're probably going to need to pay somebody to build that for you from scratch. And so what we are really looking to do is to help folks be able to get there from here with lower costs and faster time to deployment. And we don't think it needs to take a developer a couple of weeks to build your smart contract for you, unless, like I said, you're doing something super niche around like generative art or on-chain stuff or whatever. Then probably that is the case. But if you're not doing that, then you should be able to have an idea, iterate with an artist, and as soon as the artist is ready to go, you should be able to mint like whenever you want to mint. And so that's the area that we're working to solve, and then do so in a way that people, we help people move in a direction that makes sense from their Web3 business. So if one were to mint NFTs with our creator tools as an example, sure, you can add a terms of use in there, and you can then do it in a way that would be quote unquote enforced, and so that people need to agree to the terms of use before they mint. We can talk about all those things and why they are in a minute, but you can do those. You have a range of different possibilities that help you really think more broadly about building your NFT business than just like, okay, we're going to release a collection, which is part of building your business, but it's only a piece.
Yeah. So you mentioned terms of use. I would love to break that down, because when I first hear the word smart contract, and the way that I associate what a contract is, are legally binding terms, right? So why do terms of use matter when there's already a smart contract on the back end that somebody built out? I would assume they've spoken with some lawyers as well built into there. Maybe not, depending on the person. But there's a lot of intellectual property that's been created, and very sizable intellectual property that's out on the market, and leveraged NFTs to do so. So, like, what are some of these things they need to be thinking about or aware of that, like, differentiate why terms of service and adding that to as a part of your process matters?
So there's a whole series of case law that comes from the time when we used to buy software in boxes at the mall. And what these cases essentially say is you can't have terms of use that are sitting over here and then, a software or digital item over here without some sort of evidential connection between these two things. And so we used to have what we would call shrink wrap terms, and shrink wrap terms were because the boxes that we would buy software in were shrink wrap boxes, and so shrink wrap terms, you have a challenge if you are a creator and you want to enforce those terms. what might be some terms that you would need to enforce? Well, if you had a project like Flyfish, where someone was entitled by holding the NFT to certain number of visits to the restaurants at certain times, then you have terms of use, like full stop. You have real world terms of use, and you will need to enforce those. And doesn't necessarily mean that it's going to require a lawsuit for you to enforce them, but you do have terms of use.
Mm.
If you are putting your intellectual property out with any sort of limitation that's not CC0, you have a terms of use. And what the shrink wrap cases essentially say is that courts are going to look extremely skeptically at your ability to enforce terms of use if you have a shrink wrap solution, because you don't have a lot of evidence that someone has agreed to those terms of use. So what all of software moved to is what's called click wrap. And what click wrap means is this is when you get a new piece of software, or you sign up for a new website, or whatever the case might be. And during that sign up process, you're shown a long list of legalese, and you quickly scroll to the bottom of it, push the button that you agree to the terms of use, and then push submit. And the reason that you have to do that is because of these shrink wrap and click wrap cases. And so now the company has evidence that you have agreed to their terms of use. Now we have this for NFT platforms. NFT platforms have built this system where, if you're a new user or you have a new wallet, you can't buy something on any of the platforms without pushing a button that say you agree to their terms of use.
Correct.
They haven't worried yet about like what their creators that are the supply. They haven't gotten that far, most of the platforms, but they certainly know enough that they need to protect themselves, and so they've chosen to say, okay, we will protect you, but nobody's said, well, how can we protect what is needed from the supply, and what is needed from the supply is going to vary dramatically based upon what someone is trying to do. If someone is trying to do a CC0 project, that's all well and good. No problems there. You don't need additional infrastructure there. But if you're trying to protect valuable property from actual intellectual property from being commoditized in ways that you don't think it should be, then yeah, you're going to need to worry about the mechanics of actually putting terms of use into your NFTs. Because simply displaying your terms of use on your website and then even putting a link to what those terms of use are in the description, it doesn't give you any evidence that any of your collectors have agreed to those terms whatsoever. And so your ability to enforce those terms, if things get out of hand, is going to be relatively limited. So you're taking a risk, and if you're building a 0.3 ETH floor project, that's probably fine. That's probably fine. But if you're doing something meaningful and you're trying to build or if you're trying to build a media company, or if you're trying to build a brand, or if you have like real world utility that you're delivering, then you're probably going to want to have something. Like if you're Flyfish, you're going to need insurance on your restaurant. In order to get insurance, you're going to need to understand what the terms of use of this thing are. And so you're going to need to answer questions in order to get real world things like insurance or a line of credit if you need it, or whatever the case might be. And so we don't like to talk about these things until they matter, and then suddenly they matter a lot.
Well, so let's talk about the big elephant in the room that matters and everyone's talking about it: royalties. Royalties are a big topic of conversation. You kind of alluded to an announcement this weekend that the behemoth of OpenSea that everyone has used over the last few years is now also conforming and saying, oh, well, if you use this tool specifically for new collections, then you can enforce royalties, but you still can only do it on OpenSea. So now we're limiting the platforms that people can sell Um, so it's a band-aid that people don't even really like, right? And we need to actually have a true infrastructure solution that allows us to still have the interoperability of all of these platforms, but be able to enforce royalties where it makes sense. And not every collection needs to enforce royalties, but for artists, for a simple example, that's a big part of their business, right? Especially artists that are becoming very prominent in the space or will in the future. That's a big part of how they are able to sustain long term and with kind of the future they're building. So what are you doing when it comes to terms of service that starts to solve for these and allow creators that feel like they should enforce royalties or want to enforce royalties to be able to? Because in their smart contracts, they many of them, if not all of them, say 5, 10, 2.5, whatever percent royalty is to be paid upon resale of this product. But it's become very clear that that doesn't mean anything if the platform itself, the marketplace, decides that's optional.
So there's some technical background that we need to get through, and then there's also some other kind of more socio-economic type stuff that we can talk about. So technically, a smart contract, particularly in Ethereum, is was the original interface was built in a relatively myopic way, and what I mean by this is that the NFT smart contract itself has no idea if it's being transferred for value or it's just being or not. Meaning that on chain, me selling an NFT to you and me moving an NFT from my hot wallet to the cold wallet on chain from the perspective of the NFT smart contract, those are the exact same interactions. It has no understanding that I, the NFT, are being sold for value, or I, the NFT, are being just moved across wallets. We also probably don't want to change that. I say it was myopic, and that's a little bit pejorative, but it's not myopic in the way that if for example, we said, that all buys, if you're buying it from me, all buys need to just use a buy function rather than currently what they use, which is a transfer function mediated by a marketplace that makes sure that I get the value along with sending the NFT. If we said we're going to remove that, put the buy function in the NFT, and then also have a transfer function, then what we end up doing is saying to people, well, if you ever want to move this NFT, you're going to have to dox two wallets as being connected to you, which is like, that's the interconnectivity of one wallet to another, and that those both being my wallets, that's one of the most core pieces of data in the entire ecosystem that people don't want necessarily to
Right.
dox, right? They can like, people dox one wallet or maybe two wallets, and maybe those two wallets don't have anything to do with each other, and they'll run through a centralized exchange or an L2 when they need to move value between the two. But the fact that these two are my wallets, that's one of the most crucial bits of like data that is meant to be mine in Web3. So then if we say that's the only way that you're going to rearrange your wallets, either I sell it to you, and we can do that from the NFT, or I have to dox my wallets because it's a not sell transaction here. That starts to get a little bit weird. Now, effectively, it's not much different from what happens today, but it is a bit challenging to like really sort of kind of move it doesn't make it as easy, let me say it that way, and so so this is where we have some challenges, and so I'm not convinced that there's actually a technical solution to actually enforce royalties, and anybody that is saying they enforce royalties, I don't think they're enforcing royalties. Now, for example, OpenSea says in their announcement they're going to enforce royalties. They're not enforcing royalties. Like, they're not. What they're enforcing is the 2981 standard. So earlier, or last year, sorry, a standard was put forward that allow a smart contract to to tell the world this is the royalties amount that I expect, but it doesn't enforce it. It still is always a marketplace's ability to enforce or not enforce. And until very recently, OpenSea didn't even use that standard at all. So part of what this announcement this weekend is now they're saying they've adopted the standard, and they're going to, this is the way that they're going to get the royalties information from folks. And they went a little bit farther by saying, well, essentially, if you don't have a blacklist feature that blacklists other marketplaces, then you're not going to get any royalties at all, and they're not going to pay them to you. And so this is where things get a little bit more opinionated, where they are inserting themselves and their opinions about the world and other marketplaces in very, very dramatically. Now, it's kind of unclear exactly how they're going to go about doing this. There's some technical challenges that I'm not convinced can actually be overcome in a meaningful way. So I think we'll probably start to see some back off of that. But it is, that's the bit that's, I think, is a little bit more challenging. So long story short, from a technical perspective, I don't really see a way forward where we can actually technically enforce royalties any more than we can stop music piracy. Like I think it's a similar scenario. I think what we're seeing happen is we're starting to see a bifurcation in platforms. We're seeing platforms that are going for traders and are oscillating towards zero cost solutions. And then you have those that are more focused on creators and collectors that are not. And I think we're starting to see, it'll be a similar bifurcation to, Pirate Bay or BitTorrents more generally versus Spotify. And I think we're seeing an environment that is very similar to that. And so let's see who wins, if the Pirate Bays of the world win or the Spotifys of the world win.
Yeah, no, absolutely. I appreciate that breakdown. Definitely help create some context around it, because obviously it's very black and white when you start to just read headlines or even do the basics of trying to understand what all is going on when it comes to what's possible. And we're coming up on time here. I want to make sure to give you the floor. You've got some announcements coming out this week, some things that are going on with the new platform Aspen. So I want to give you the floor to kind of take it from there.
Sure. So this week we're going to have a really exciting mint. It's going to be the very first mint in Web3 history where terms of use are enforced on chain and must be agreed to before any holder is capable of holding that NFT in their wallet. And it's needed because we're taking a bit of very awesome historical IP and we're remixing it for Web3. And so we're not only remixing the legal side, but we're remixing the content side, and it's going to be a really big deal because it's an amazing piece of historical content that is now going to have terms of use enforced on chain with a click wrap agreement, and it will be the very first kind, and so we're really excited about that mint. We have a couple other mints lined up behind it that are going to be very, very interesting for the world as well.
Love that. We'll definitely be taking part in that historical moment for you guys. Where can people go to find you, to find the mint, stay up to date? I'll make sure to link it all in the description below and in the show notes. But for everyone listening.
Sure. We're on all the things as Aspen NFT, but with one N. So we're AspenNFT.io, and our Twitter handle is AspenNFT, again, with one N on all of the things. Love to have everybody join us for the ride as we move forward into a kind of a new generation here of NFT infrastructure.
Yes, everybody, if you are looking to be a part of something really great, focus on building actual infrastructure in a business, not just a project that has random animals that you're minting. and want to just see it all happen and unfold over the next few years, Aspen is a company to follow and pay attention to because they're doing some really great things. And I'm really excited for this mint. I got a little sneak peek, and it is some. If you are a audiophile, you've been following music for a while, you're going to be really excited to see what they're coming out with. Casey, this has been great. Thank you so much for your time. And maybe we'll have to do it again as things start to unfold.
Sounds good. Love to come back.
Perfect. Thank you so much for everyone who's listening, and we'll see you next time.